As soon as the ceasefire agreement between Iran and Israel was reached, Bitcoin instantly recovered and broke through the 100,000 mark in the market situation caused by liquidation. Can we pick up cheap Bitcoins? Is it a buildup of strength or a lure to buy more? From AI native payment to on-chain financial report war, what signals does a 16Z semi-annual report reveal? On-chain risk control becomes a legal minefield. Will the battle between 3AC and FTX rewrite the rules of the cryptocurrency world? Microsoft, Amazon, Meta as solid as a mountain. Is Bitcoin worth hoarding? BNB, it can also be listed on the balance sheet. Institutional hoarding of coins needs a new script.
Tuesday, June 24th, BitcoinTV English channel. Where is the coin chain? I am Michael. Let me start with the 24-hour data headlines of the cryptocurrency circle. In the early hours of this morning, US President Trump officially announced that Israel and Iran have reached a comprehensive ceasefire agreement. Iran took the lead in the ceasefire, and Israel will respond in the 12th hour, and 24 hours later, the 12-day conflict will be completely ended. Affected by this wave of geopolitical cooling, the cryptocurrency circle immediately came back to life. Bitcoin Spot ETF had a net inflow of $351 million yesterday and has been attracting money for 10 consecutive days. Who bought the most? BlackRock EBIT took $218 million in one go. Fidelity FBTC also took $106 million, and RKB, GBTC, and other younger brothers were not idle. Bitcoin is even more of a takeoff action, rebounding from a low of $99,600 to $106,000. As of 12 noon, it was hanging around 105,000 to take a breath. The disc looks familiar, with stepping on 100,000, stepping back without breaking, and continuing to rush. The long-term holdings on the chain are as stable as old dogs, and institutions buy every wave of panic without hesitation. Yesterday, the US airstrike on Iran shocked the entire market sentiment, and Bitcoin once plummeted to $96,000. But a look at the on-chain data shows that spot players are not panicking at all. Key indicators STHSOPR is used to see if short-term holders are cutting their losses. It is only 0.998 now, which means a slight loss, but not to the panic point. Bitcoin rebounded again, rushed to $106,000, and is now firmly above the realized price of $98,220. This sell-off was mainly caused by the liquidation of leverage players. The group of people who really took the spot on the chain are still as stable as a mountain. This is called "I don't move when the wind comes, and it will rise again after the rain." So don't be scared by the market fluctuations. Real Bitcoin holders have long been watching the market in a Buddhist way. You smash your market, I take my coins. Whoever panics will lose. Yesterday's on-chain data came out, and I found something quite interesting. Now everyone has locked Bitcoin and is too lazy to deposit it in the exchange. Now there are only 37,000 addresses depositing coins in the exchange every day, with a 30-day average of 46,700 and an annual average of just over 70,000. Compared with the past, it is as deserted as a subway station late at night. From 2015 to 2021, there were an average of 180,000 addresses operating every day, and it was as hot as the rush for tickets during the Spring Festival. Why are they so calm now? First, the big players directly go to ETFs and are too lazy to transfer coins themselves. Second, retail investors are not so excited, and their enthusiasm is not as high as before. The most important thing is that everyone now really treats Bitcoin as a digital gold bar, and they don't toss it around and lock it in the safe after buying it. So don't think that fewer people mean that the enthusiasm has dropped, but in fact, it is a change in mentality. In the past, speculating on coins was like opening a blind box, but now hoarding coins is like buying a house and collecting rent, and making money steadily is the kingly way. To put it bluntly, this trend has transformed Bitcoin from a speculative toy to an asset base. The style and pattern Please like and follow us to sort out the latest developments in the currency circle, chain circle, and mining circle within 24 hours. Click the small bell to join the channel and become a member. You can receive the Member Wealth password from Monday to Friday. With this recent wave of operations, a16z has once again turned itself into an all-round player in the technology circle and the financial circle. While keeping an eye on how to sell AI more smoothly, it has also invested in the medical automation project Tenor, and it is a cross-border king. What's more exciting is that a16z has just released a semi-annual report on the encryption industry and directly used 5 key indicators to give the entire Web3 a physical examination. In the first half of this year, the market was really restless. Stripe rushed to acquire the embedded wallet Privy, and the stablecoin track attracted a bunch of traditional financial institutions to line up. DeFi fees have been declining, and user activity has been rising. The infrastructure has also been truly supported. As for how to play in the second half of the year, is the signal given by a16z worth following? Let's continue to look down.
In terms of wallets, the number of mobile wallet users has reached 34.4 million per month, a year-on-year increase of 23%. The decline in transaction fees, coupled with the optimization of account abstraction protocols such as EIP7702, has driven the continuous increase in usage. Embedded wallet products such as Privy have been actively acquired by major companies such as Stripe. In addition, the monthly transaction volume of stablecoins exceeded $702 billion, a year-on-year increase of 49%. Now using stablecoins to convert to US dollars, the transaction will arrive in 1 second and the cost is less than 1 cent. Traditional financial giants Visa and MasterCard have increased their investment, and new players such as Mate are also accelerating their entry.
Crypto is a great kind of backbone for doing that because it's a way to actually pay for everything, have an economic incentive. And then there's, crypto. There's going to be billions of AI agents in the world. They're going to need to transact, and so you're going to need crypto. You're going to need AI native payments.
The report also pointed out that institutional funds are accelerating their entry into the market. In June, the net inflow of Bitcoin and Ethereum ETP products reached $45 billion, an increase of 28%. SEC recently, the issuer of Solana Spot ETF has also been required to update the filing, or is close to the approval stage. In addition, the proportion of spot transactions on decentralized exchanges will increase from 11% in 2024 to 17% in 2025, and the transaction volume will increase by 51%. At the same time, the average monthly transaction fee of the entire industry has dropped from $439 million to $239 million, a decrease of 43%, indicating that various public chains continue to optimize technology to reduce user costs.
Don't be too happy. The monthly active users of 34.4 million wallets may sound impressive, but we all know that who doesn't have a dozen apps on their mobile phones now? Some may just use the wallets to make money and delete them after using them once. Circle's IPO and the surge in stablecoin transactions may also be because traditional finance has begun to hype it up as electronic motai. If you can't drink real motai, try it on the chain. What's more heartbreaking is that by June, there were only 22 tokens on the chain with monthly revenue exceeding $1 million. A16z said it very bluntly. Don't rely on painting cakes to tell stories in the second half of the year. Only projects that can make real money are worthy of talking about valuation. This wave of crypto circles will also start to compete for financial reports and cash flow. Who will have the last laugh? It depends on who can really make the money back. FTX and Three Arrows Capital 3AC. This pair of bankruptcy enemies has been fighting again recently. Speaking of 3AC, it is a well-known radical in the cryptocurrency circle. It loves to use high leverage and bet everything on the Terra ecosystem. As a result, Luna exploded in 2022, which directly blew up its small treasury. The funds were lost to the throat, and there was no time to hedge a penny. FTX jumped out to help close the position at that time, originally wanting to stop the bleeding, but now it has been sued by 3AC, saying that you closed the position too harshly. making us even worse and asking for it. FTX lost billions of dollars. On the one hand, it broke the news, and on the other hand, it quarreled. This script is really a classic sequel in the cryptocurrency circle.
In March this year, the U.S. Bankruptcy Court approved Three Arrows Capital to increase its claim against FTX from $120 million to $1.53 billion. 2024 year 11 in January, Three Arrows Capital claimed to have found new evidence, accusing FTX its value was sold off 2 weeks before the bankruptcy liquidation started $15 billion in assets.
If you recall, one of the biggest critics of us right after our collapse was Sam Bankman-Fried himself of FTX. And we now know, as things are coming out, that he was probably covering up a lot of things on his side. And it's also coming out that he hunted our positions.
However, FTX lawyers countered that Three Arrows Capital's claim was based on false evidence and ignored key facts. FTX stated that it closed Three Arrows Capital's position worth $820 million at the time as a stop-loss operation, which helped the other party avoid losing an additional $18 million in bankruptcy.
The dispute between 3AC and FTX in the cryptocurrency rivalry is endless. 3AC has to respond to FTX's rebuttal before July 11th, and the court has already scheduled a non-evidentiary hearing for August 12th to continue the wrangling. But this is not just a one-on-one duel between the two of them. One is the leverage king who went bankrupt, and the other is the exchange king who went bankrupt. Now they are fighting each other more fiercely than when the thunder broke out, making the entire cryptocurrency circle watch the excitement and panic. Investors saw, "Oh, so you big institutions are so unreliable, then who can we trust?" To put it bluntly, this drama exposes an old problem. If the on-chain risk control mechanism is not backed by the system, it will become a legal risk in minutes. So don't think this is just a fight between two bankrupt companies. This incident is likely to push the entire liquidation mechanism and regulatory rules of the cryptocurrency circle to be redone. It is very likely that they will fight, and the whole industry will have to pay the bill.
As companies hoard Bitcoin, differences of opinion intensify. Should they be conservative and wait and see, or aggressively enter the market? From Bitcoin to BNB, who is defining the new base of corporate assets?
There is a new way of playing at the corporate level called corporate Bitcoin reserves. Simply put, it means no longer holding all the money in US dollars and bonds, but directly buying Bitcoins as a base position. The first to come out of this was MicroStrategy, led by Michael Saylor, who bought so much that he almost became the Federal Reserve on the chain. Now more and more companies are beginning to get excited. Do they also have to replace traditional safes with digital vaults? What's more exaggerated is that those who are bullish directly call for 130,000 or even 1.5 million US dollars per Bitcoin. But at the same time, many large companies seem to be anesthetized, motionless, sitting in the office and continuing to count dollars for fun. Now the real question is, whoever leaves first may set the asset allocation rules for the next generation.
Probably the biggest thing that's happened in the past 4 years for Bitcoin. It's incredibly auspicious for Bitcoin and for the entire crypto industry. But we're also getting a lot of very constructive support from Wall Street. BlackRock has been a very, very strong voice articulating the Bitcoin value proposition.
Although the concept of corporate Bitcoin reserves is gaining popularity in the market, shareholders including Microsoft, Amazon, and Meta have rejected proposals to include Bitcoin in strategic reserves. At Meta's 2025 annual shareholders meeting, the proposal was opposed by more than 90% of shareholders, with a support rate of less than 1%. Meta's board of directors pointed out that its main concerns are asset volatility risks, regulatory uncertainty, and irrelevance to the company's main business.
Don't always imagine that the tech giants will wake up and all Go all in on Bitcoin. Meta, Amazon, and Microsoft are still busy making money in their main business, and they really don't have time to rush into the cryptocurrency circle to be pioneers. Why don't they dare to join? Just 3 words: no dare. Bet. The supervision is still unclear, the accounting rules are not determined, and the custody method is full of pitfalls. Big companies will not act rashly on such things. So you watch people shouting, the era of corporate hoarding coins is coming every day, but the reality may still be more to wait. In the eyes of conservatives, if Bitcoin wants to become a standard asset allocation, at least the entire set of policies, processes, and risk controls must be polished. The radicals hold the opposite position. In their view, Bitcoin is currently at a strategic outlet. If you wait until the rules are complete and the supervision is mature, before considering allocation, the opportunity will have long been cold. The market dividend may have long disappeared, and the laggards are destined to miss the dominant position. Last night, Bitcoin nail house Michael Saylor posted on social media that MicroStrategy raised another $26.1 million between June 16th and 22nd, and then bought 245 Bitcoins without hesitation at an average price of $105,856. The operation was very straightforward. Now MicroStrategy's holdings have reached 592,345 Bitcoins, just one step away from the 600,000 mark. Interestingly, BNB Chain seems to be copying Michael Saylor's homework recently.
3 former Wall Street executives set up Build and Build Corporation, which plans to raise $100 million by the end of June, purchase BNB in batches on the open market, and list the company on Nasdaq. Once it lands, BNB will become a reserve asset of a listed company for the first time, symbolizing that the corporate encryption reserve strategy is expanding from Bitcoin to a multi-chain ecosystem. In response, Binance founder Zhao Chongping said that many other companies are planning to include BNB in their corporate asset lists.
What we've seen, and I still believe that 100%, is Bitcoin is usually the first crypto that people interact with when they come to crypto.
Since May, the on-chain data of BNB Chain has been soaring, with daily transaction volume soaring from 6 million to 15 million, and the number of active addresses about to break 2 million. Even the number of real users has refreshed the historical record, reaching 1.7 million. Isn't this trend like the MicroStrategy script of buy and then take and wait for the price to rise on the entire chain? While pulling data and the market, it sprints directly to the first echelon of the chain circle. In the past few years, MicroStrategy has almost become the first stock to hoard Bitcoin. In the past 5 years, it has swept the market all the way. Not only has it soared, but the stock price has also taken off, with the price of the currency directly playing a financial leverage dual engine show. This strategy is so popular that a large number of listed companies around the world have copied homework and moved Bitcoin into their own company balance sheets. Now, if Build and Build Corporation does replicate this strategy to BNB, it will not only represent the first time that multi-chain assets have been included in the Treasury system of a listed company, but also indicate that the logic of crypto reserves is extending from Bitcoin to more ecosystems, ushering in the first year of BNB's institutional narrative.
Federal Reserve Chairman Powell will go to Capitol Hill this week. He will face increasing pressure to cut interest rates from both inside and outside the Federal. This hearing may rewrite the Fed's tradition of staying away from politics in the past decade. According to @PandaJackson42's data panel, Binance Alpha's trading volume reached US $520.08 million on June 23rd, and daily trading volume has continued to decline since June 8th. According to official announcement, the United States SEC announced that Kevin Mullendorf will officially become the agency's new Inspector General on July 28th. According to CME, Federal Reserve observation data shows that the probability of the Federal Reserve cutting interest rates by 25 basis points in July is 20.7%, and the probability of maintaining unchanged is 79.3%. According to CoinDesk, The governor of Texas signed a bill to officially establish the first Bitcoin reserve in the United States supported by public funds and will allocate $10 million to purchase Bitcoin.
Okay, the above is the main content of today's program. Our channel focuses on valuable news in the currency circle, chain circle, and mining circle. There are news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow it. You can also become our member and receive the member wealth code from Monday to Friday. Let us become rich together and add a zero to our assets in the bull market. See you tomorrow.